right. Okay, take two. We had some technical difficulties. Excuse our starting a little bit late. Thank you for joining us today. This is Roman Shersher, your number one online resource for buying property, with your market update, real estate update. We got a lot to cover today. Very interesting new law that came out allowing you to just sell your ADU. On a state level, it just came out. It's not being done yet, but this is going to be interesting to see how this works. And also, we've been talking a lot about interest rates lately. Fannie Mae came out and said they predict that they're going to be under 6% by the end of the year. I think they're going to be even lower. We'll take it from there. We'll see. Remember, guys, if you like this video, make sure you hit the like button. So I know to keep creating content and videos just like this. Our viewership is growing on a weekly basis. We're up to 200 views on some of our weekly updates on a weekly basis. So I'm very excited to continue growing this. I know it's going to be a little bit of a niche market. I focus mostly on Southern California, but as you know, I'm a real estate broker and investor in both the states of an investor. I'm a broker here in the state of California, but I also invest in Florida, Jacksonville, Florida in particular. All right. Let's talk about some of our current projects. So we have 3 duplexes that we picked up and we're renovating. First unit of that should be done this week. We're hoping to have for the first duplex done this month, and all 3 done by the end of next month. We have a new property coming to market in Jacksonville on a street called Mesa. That's a 5-bedroom, 3-bath house. Coming to the rental market. Really great renovation that was done there. Very excited about that. We have a renovation here we're doing in Woodland Hills. We just posted concrete being poured for the backyard and the pads that we took out a wall, so we need to put up a beam. So there was a lot of structural engineering that occurred there. So that's going to be cool. We're picking up 2 more properties in Jacksonville right now, one for a flip, one for a reno. If you have interest, I work with private partners in the Jacksonville market. We're looking to pick up a lot more units this year. Would love to work with some of you if you're interested in getting into the real estate cash flow game. Hit me up, DM me, text me, talk to me. Definitely reach out. All right. Anyone watching on Instagram, be sure to head over to the Facebook or YouTube after this to check out the links to the slide and the slides to the content I'm about to go over today. Remember, I give you raw data, and I try to avoid giving my opinion. If there's going to be an opinion given, it's going to be, for example, today we'll be hearing from Doug Duncan, the chief financial economist for Fannie Mae. So let's jump right into it. All right. New law was passed on the state level at the beginning of the year, allowing ADUs to be sold separately. Okay. And what this means, it's kind of crazy. Somebody built an ADU on a lot, and now they're going to be able to just sell that off separately. The benefit to the seller is that they get if they keep it, they get the cash flow from the monthly income from the rental, but if they sell it, it gives them money that they may need to fix up their own house, or if it's an elderly couple, it gives them the ability to supplement their income. Now, this is a state law. It gives cities the option to allow these homeowners to sell these ADUs. Currently, there's no cities that have approved this just yet, but on the state level, AB 1033 is the name. Allows this to happen. What's good on the buyer level is that if you can't get into a home yourself currently, but want to take part in the advantages of home ownership, you're able to do so on a smaller scale, a 600 square foot granny flat, for example, an accessory dwelling unit, a smaller home. That may give you still that little backyard patch, some little small area, and hopefully a parking spot where a lot of them don't come with parking spots. Some of them do, especially the ones that are, you need that with if there's not going to be any street parking. So the one catch here, so it allows a buyer to get into the game. The one catch here is that the person selling the ADU will have to create an HOA, a homeowners association, for, let's say, if there's just a home and an ADU, for the two people that are going to share this common area, because you're not subdividing the lot. The lot is not being split up. It's still a single lot that now will have two dwelling units, two people living in two homes, two separate household entities living in two homes on that same land. Okay, so they'll need an HOA that'll just kind of dictate some early terms. I feel like there's going to be, this is a niche business that's going to pop up for people to be able to create these HOAs for these little ADU subdivisions. Also keep in mind, most homes today are allowed to build not only an ADU and a junior ADU as well. And I've seen a couple of extra ADUs on a certain different types of lots. So the HOA can be more than just the two. It could be 3 or 4 or 5, depending on how many units are on the property. All right, let's go into where we are with mortgage rates. So Fannie Mae believes that mortgage rates will dip below 6% by year end. What I'm hearing is that starting about May, also by a very prominent economist, his name is Barry Habib. He's the forecaster for most of the mortgage industry. He's thinking that we're going to start seeing rate drops, 3 to 4 rate drops this year, starting around April to May of this year. If that occurs, then we should fall well below 6%. Now, Doug Duncan, Fannie Mae's senior vice president and chief economist, says that inflation's decline and the resultant Fed pivot to signaling future rate cuts leads us to believe that home sales, so not only the rates, the home sales, quantity of sales, and mortgage originations likely bottomed out in the second half of last year, and that a gradual improvement is now underway. We expect mortgage rates to dip below 6% by year end 2024, and for home builders to continue to add new supply, both of which should aid affordability. In fact, also today came out an article that the home builders' confidence reached 44, which is the highest point that it's been in about a year and a half. So Fannie Mae's, what they call their ESR group, the Economic and Strategic Research Group, expects that the annualized pace of existing home sales to move up to 4.5 million units by the fourth quarter of this year, up from 3.8 million units in fourth quarter of last year. What they're saying is not only do they see rates go down, when rates go down, we're going to see more sellers come to the market. We're going to see more inventory and more sales. We had the last 2-3 years have seen a tremendous reduction in the quantity of homes for sale, the amount of supply of inventory of homes on the market, and with the same demand or slightly lesser demand, we're still seeing, in some cases, 20 offers on each house. That is not a stable or an at-par housing market. We're going to see more people come to the market. We're going to see more sellers sell their existing family homes. New home builds have gone up slightly, but not significantly. But we're going to see more transactions. So they forecast 4.5 million transactions by the fourth quarter, up from 3.8 million. That's at almost a 19%, 18.5% increase in sales. Okay. Now, I discussed last week how last year, LA County, the median home price went up 7% in the last year, 7.1% to a median of $840,500. Now, I still hear some people saying, I'm going to wait till rates drop. What they're not taking into account is that if you wait from now to the end of next year, and we stay steady at that 7% year over year price increase, which it could surpass that this year, okay, that means that between now and then, you're going to lose $60,000. If you're buying $1.5 million home, that's $71,000 you're going to lose. If you're buying a $2 million home, you're going to lose over $140,000 in value between now and then. What makes much more sense is if you can get in now before the prices have increased, especially right now, it's a little bit of a slow time in the market. I feel we're going to see a lot more people coming to market during the normal cyclical time, which is about between April through August, September, October. Okay, you're going to see a lot more demand. So if you buy right now, you're going to save yourself over $100,000. You can always refinance that rate later. Remember what they say? They say, marry the home, date the rate. Okay, refinance at a later point in time, allowing you to take advantage of today's prices and later tomorrow's rate reductions. All right. Okay, let's take a look at where these rates are as of right now. So we've been fluctuating. Last week, we were at 6.69 on the 30-year fixed. As you can see now, we've risen 20 basis points to 6.89. We were at 5.95. We're now at 6.17 on the 15-year fixed, 6.98 on the jumbo. Now we're at 7.11, 7.11. We were at, on the 30-year FHA, we were at 6%. We're now at 6.14. 5/1 ARM was 6.19. It's only gone up 5 ticks to 6.24. And the 30-year VA went from 6.02 to 6.15. We're going to see a little bit of this fluctuation. Rates dropped nearly a whole point from their high. They were up to 8%. So we went down to 6.69%, down 1.32 percentage points. So now they've gone up slightly, 20 basis points. We're going to see them fluctuate like this. This is just my opinion. We're going to see them fluctuate like this until the Fed goes and actually cuts the rate or signals that they're about to cut rates. Then at that point, we're going to consistently see this rate drop and drop and drop. All right. Quote of the day. Let's go back here. All right. Quote of the day is by Yvonne Moon, a renowned author. She writes that sometimes you have to look back in order to understand the things that lie ahead. I love that quote. Looking back at real estate, I've been in this business at this point for about 18 years. I've seen the different cycles. I'm very bullish on the real estate market right now. And I'm putting my money where my mouth is. We're accumulating properties in Jacksonville because I think rents are going to be really strong going forward. I think prices are going to be really strong going forward. I think the years ahead are going to be very good. Unless, of course, some kind of something catastrophic, unforeseen, an X factor occurs, then of course that can derail that momentum. Okay, remember, check out the links to the content on my Facebook or the YouTube page. And if you like this video, please make sure you hit the like buttons so I know to keep creating content and videos for you just like this. This is Roman Shersher, your #1 online resource for buying property. Thanking you for spending the time with me. Have a great, great weekend.